followers are having an extreme anxiety or even panic attacks, asking me what's happening. If you look at the surface, today the S&P is down by 1.6%, but tech is being obliterated. This are pullbacks from today. Tech overall is probably down by anywhere from 6 to 8%. So a lot of individual stocks are down even more than that. Like Robinhood here is down by 8% just today. So what's going on? Now I can tell you a cookie cut answer, tell you that what every other news reporter is saying to you, AI bubble, interest rate cut, and call it a day. But that's not what's going on. What's going on is leverage. Leverage is too much, and a pullback is causing a lot of people to sell or buy back positions, and that is what's causing the stock market to go down. Now you have to understand, investing is a cycle. Doesn't matter the stock, the company, or what, but it's an economic cycle. First, people invest with excess money they have. This causes that initial boom. Then people buy into the market and they take out of other assets and put it in the market. So this could be maybe Bitcoin, maybe real estate, basically any other investment asset. They will sell that investment asset and get into the market. What happens when you tapped out your extra cash, when you tapped out your other forms of investments? Now you go to leverage. You use the money you have right now, or the stocks you have right now, or any other asset you have right now, and you get debt to buy into the market. That's where we've been for the last year. If you've been wondering how the hell the market keep going up when we are having increased number of layoffs, when we have increased number of automation, when we are having inflation, it's leverage. Everybody keeps buying debt to get more stocks. We're hitting a peak. We're hitting a peak, and these are the early signs of a peak. This is once people have no leverage, once people are leveraged out, this is what you get. Overcorrections on small pieces of data. We're in an AI bubble. We've been saying AI bubble since the start of the year. What's causing the AI bubble to pop now? Why are we in such a massive consolidation? Because people are being stopped out of their positions, and now this is the price they're paying. Weak economic data. We've been saying this since the start of the year. Why is that a big deal now? Leverage. It's all leverage. And until you understand that fact, you will struggle in the market. It's one of the biggest reasons why I have such a large cash pile. Why do you have 40,000 in cash? Well, because I understand this is what's going on. This is why I buy into companies that I know are oppressed. Because if a company is already down 20%, it can't go any further. They can't sell the company for free. I'll buy the theoretical limitation. And this is why it's very important to have some sort of cash on opportunities like these. If this is truly a stomp out event, true stomp out event, this is nothing. You're going to see another 6% consolidation. And by the way, we haven't even hit 4% consolidation yet. VOO, which tracks the S&P, which is the S&P, was at $634 at its all-time high, which was less than 2 weeks ago. Today, it dropped to $612, which means at a consolidation